What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel also happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and trading method we use can be implemented when trading any company that's traded on the U.S. stock market. Make sure you hit the like button if you enjoyed this video. Thanks to those who continue to tune in, hit the like button and leave comments on the videos. If you haven't already, make sure you hit the subscribe button and the notification bell as well. That way you are alerted when we release new videos, especially like the bonus content. The nightly and weekend videos, like tonight's video, focus mostly on identifying triggers and targets for trades ranging from, intraday scalps to long-term swings and leap trades. But if you want a deeper dive into, exactly how we set up our charts, the color coding we use for the different time frames, things of that nature, make sure to check out the bonus content on our YouTube page. And for more information about the strat, which is the basis of our trading and charting method, you can find more free information in the description of this video. So I do encourage you to watch the full video because along with the triggers and targets that we set, we do give some good insight into the price action on all time frames. So let's go ahead and get into the agenda for tonight. We're going to go ahead and recap today's price action, and then we'll zoom out like we normally do and look at the week, month, quarter, and year. We'll zoom back in at that point and set our 4-hour markers and the triggers and targets for Thursday, October 6th. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. So just getting into today's intraday price action, we're going to look at it from a scalping perspective first. It's how we approach things from the beginning of the day, unless something on like the 4-hour or day has been triggered, basically at open. So today you can see we've got the major 4-hour or not the major, but the 4-hour markers on the chart here. Up towards the top, we've got previous high day at 46.88. Down a little bit lower, we've got the overnight high at 43.34, and then the previous low a day at 42.53. And then below, we did drop down to 39.80 for the overnight low. Somebody did ask on yesterday's video what was the cause for that drop around like 9 Eastern. And I went back and looked through some things, and what I think I would just attribute it to was just the Asia market getting going, responding to the down day that we had in the U.S. market. So you can see that it hit a pretty major level overnight and made a nice little bounce. We were able to open up back in the middle of yesterday's price action. So that's the last 4-hour marker that we want to point out here. The opening print, or the first traded price of the day, is 43.21, and you can see the overnight high overnight high and opening print are basically the same level. So it kind of takes one of the targets off of the board if we're looking to get into calls, at least from a scalping perspective, and we would have to quicker move to the 4-hour triggers and targets at that point if we do reach that previous high a day, which is what we did today. So you can see we opened and pushed it up immediately. Now we knew, based off of we didn't know, but we figured that based off of a couple of things, the amount of drawdown we had yesterday. AMD had earnings, Micron had earnings, and they actually reported pretty well, even though price did go down in after hours again. I think that was mostly attributed to the Asian markets. So we had a pretty big push to the downside, intraday yesterday, and then again overnight. So kind of oversold from a very short-term perspective. So what we did is we went ahead. We don't do this too often, but on days like today, we switched to the 1 minute, and we were able to get it in pretty early. Oops, Thinkorswim will work with us here. Let's get to today. And we can see on the 1 minute that we got the higher low, right? So we pushed up, we got a higher high from the 1 minute time frame from yesterday's the end of yesterday's price action. So we got the higher high here, we pushed down, and we got a higher low above opening print. And if you're familiar with this channel, you already know the rules, but if not, the general rules are: we look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. So in this case, we get the higher low above opening print, so we entered calls here. right? Now the first target is normally overnight high or previous low a day, whichever one comes in first, but this higher low was above overnight high. So again, that took that target off the table for us, and we were just left with trying to reach that previous high a day. So you can see we got the higher high, higher low, and then we really bounced, right? Now we came up and it basically, I feel like ever since we, the levels have played out ever since the April to July bull flag that we had. I feel like we're bringing up flags a lot, but I don't want to get too, I guess, flag happy. But we can see that this is basically a bear flag here. I'm sorry, a bull flag here. We got the big push up and then consolidation, right? Acceptance of these higher levels. And since we didn't break down, we got that push up, which was kind of a fake out, right? So we got the push up to get the higher high, but because we got the higher high coming from a lower low, it was really just a broadening formation. So if we wanted to get down on the 1 minute, and really I don't want to be on this 1 minute because we don't want to look at 1 minute and make too many trades for long periods of time off of 1 minute. But you can see that a broadening formation was created here. So it gave us more confidence to stay in that play. Now we then switched to the, I think it was the 15 minute. No, it was it the 15 minute? Yeah. We can see on the 15 minute here, there was that push up, the sideways consolidation, that higher high on the 1 minute that created that broadening formation, and then that lower low, which really just created a higher low on the 15 minute. So again, we were able to have confidence to stay in those our calls that we bought early in the morning because we got the higher low that triggered here. And we actually added a couple more contracts at this point, right? So higher low on the 15, we got the higher high, higher low, higher high, higher low. And then the next boost to close that gap that we had there, we closed out a majority of our position there. We kept a couple of runners. We did get the higher high, but then once we got this higher low here, we went ahead and exited the rest of our position. So didn't hold anything to swing overnight. We still got November monthly expiration contracts, a couple Decembers now, and January 26th and beyond. So we've got plenty of skin in the game to the upside. Want to protect the profits that we made today. This could just be creating a lower high opportunity on the 1 hour. And actually it did, on the 1 hour, it did actually trigger the higher low. So let me try and make this bigger for those that are on phone. But we can see here was yesterday's price action. We got the lower high here, made the lower low, pushed down. Here was the lower low. And we pushed back up all the way through today. Closed the gap, but we did create a lower high, right? So this 2 down right here locks this candle in as the lower high. So from a 1 hour time frame perspective, technically we're still in a downtrend. We want to look for some type of higher low, especially above this 45.50 level, because we've got some real thin structure below that. So if we break below this 45.50 level, we could see a pretty rapid descent back down to where we opened up price on Wednesday, November 5th. So just to keep in mind, we from a 1 hour time perspective, we're still in a downtrend. 4 hour, it's kind of set up to put in a lower high, right? We got the red inverted hammer here, so closed at the lows of the second 4 hour candle of Wednesday. So can be pretty easy, especially if we don't get a good push up overnight. Could be pretty easy to go 2 down, locking in this lower high on the 4 hour. But again, we'd be looking for a bounce to give us a higher low to try and start to reverse that trend, right? Let's zoom out a little bit further. Let's look at the day chart. Let's get a little cleaner chart here. And we can see, we talked about yesterday. Whoa, what the heck? Thinkorswim is... there we go. We can see we got what we were talking about yesterday, a widening of this broadening formation, or at least what looks like we might have a widening of this broadening formation. So we had this low, then a lower high, and a lower low all in one candle, creating this broadening formation here on the day chart. And then we had this, after this low, we went and made a higher high, making this broadening formation on the day chart. So these orange lines, again, that's the day chart, the day time frame. And so all we did today by locking this in as a lower low is just widen this broadening formation. So if we just take this, All right, so now we've gone low, high, low. So this is the broadening formation to the downside, and we've just widened it. So now we got to see if we're going to push up and widen this broadening formation to the upside. I'm not going to call for that right now. We've got a nice wick at the top of today's candle after the gap was closed. So are we going to be in this gap close reversal situation where we close the gap and reverse, go back down? We've still got this gap down below that's not too far away. That could be calling our names as well. In the overall scheme of things, let's make this a little smaller here. Right, we're still plenty of room for a pullback, because this was considered like a range here, right? And this could be considered a look above and fail, right? So we looked above, tried to get price action above this range and fail back below, and we can see some more sideways action from there. But again, I'm not trying to predict the future. That's not what we do on this channel. We just set triggers and targets to the upside and downside and respond accordingly. All right, so although we did lock this in as a lower low, we did get a pretty solid green candle and look to be progressing our way back up to this daily downtrend line, and try and press that and turn around this downtrend that we're in from the day. Now it's going to take a little bit longer than the 1 hour and 4 hour are going to take. So don't expect the trend to be turned around tomorrow, right? We've got to get a higher high and then a higher low to start an uptrend, right? And we don't have that higher low or the higher high even yet. So we've got to go get that higher high first. Not a lot of room for this to be, a situation where we get a lower high followed by a higher low, right? There's not a lot of room down here to put in a higher low. So if we go 2 down tomorrow, if price goes below, if on Thursday, if price goes below Wednesday's price action, there's not a lot of room to leave a higher low. Not saying it can't happen. We could still see support there and get that bounce, but the probabilities aren't as high as like with the 1 hour and the 4 hour. All right, so that's, I think, enough talking about the intraday and day chart. Let's go ahead and zoom out a little bit. Let's look at the week, because it is a little interesting, the situation we find ourselves in now. Right, we did go 2 down, locking in the higher high on the week. Actually, let me make this bigger for those on phone. Oops. There we go. So we've got these 8-9 weeks pressing up. Since we went 2 down this week, that locked this in as a higher high on the week. But you can see how we're already hammering up. And if we turn the week green, it doesn't take long for the week to actually turn into a green 3 or a bullish engulfing candle at that point. So that would be another more bullish signal. Creating a soft higher low at this point. Again, we've talked about how we've gone a long time without getting some type of higher low. So could this be it? Possibly. We got to see how the week continues to progress as far as price action. Do we turn green? Even if we don't turn green, are we a doji? If we do turn green, do we turn into a bullish engulfing candle? We'll see by the end of the week, but that'll probably give us a good idea as to how next week will go. If this turns out to be a higher low, we've got this gap up here that we could try and go fill, right? We've got the weekly broadening formation we've got to deal with, but there is a gap above us still calling our name, right? And when we look at things from the month, quarter, and year perspective, it starts to look even better. So let's go ahead and get a better chart there. All right, so we can see from the month perspective, again, we're an inside month still. It's still the beginning of the month, not even a full week of trading yet. But we're in that upper third of last month's candle. So very good possibility that we can go 2 up this month. A little bit harder to go 2 down because of how big last month's candle was, relatively speaking. We could just finish as an inside month, right? So just some indecision. Digesting the move that we had last month. Again, it was a pretty big move, especially when you include the wick. So again, from a monthly perspective, nothing's breaking down. If anything, we're starting to turn a little more neutral, not bearish at all at this point, right? The quarter, as those who watch this channel, this is the one I like the best, right? We've got the 1 combo 2 down, combo 2 up. One of my favorite patterns, and as long as we're above that 36.15 level, then that's still in force, right? We're running into that resistance at last year's 50% line. We've been talking about this for I guess, weeks now, right? Because it had been resistance in the weeks past. We were able to bust through it this week and last week, but it was resistance previously. So we've been talking about this level for a while now. And this wick that we're seeing in the fight over this level should be nothing of a surprise. But as long as we're above that 36.15, we're still in good shape. Nothing breaking down on the quarter. Nothing even really neutralizing the quarter, in my opinion. Right? We're still pretty bullish on the quarter. Now the year, we talked about how we started things out with the come on, Thinkorswim, 1, 2 up, 2 down, but we ended up not fully reaching magnitude, giving us a higher low on the year time frame and giving us a nice green solid candle, hammer candle, giving us a better possibility of going 2 up in 2026, triggering the 2 down, 2 up, giving us a magnitude of 70.08. And of course, once we reach that, it's not too much further and we're in all-time high territory. All right, so that's our zoomed out look at things. Again, the week, we've got the little pullback that we were looking for. Will it continue to pull back? Is remained to be seen. We'll continue to watch that. But again, the month, if anything, maybe neutralizing a little bit, but month and up still looking pretty bearish. All right. Let's go ahead and look at the triggers and targets for Thursday, November 6th. Right now on the chart, I've got the 5-minute time frame up. Again, we'll approach things from a scalping perspective first. That's one of the easier repeatable strategies that we employ here, right? So right now we have the previous high of day, which is Wednesday, November 5th. Previous high of day at 48.43 up at the top of the screen. Previous low of day of 43.21. We've got so far overnight low of 46.15 and overnight high of 46.98. All right, so those should probably move overnight. Let's just say overnight high pushes up a little bit more, and we'll leave overnight low where it's at, right? We're up and up after hours. So let's just say that's the low for the night. We want to look at where we open up on Thursday to identify which way we want to play, right? So say we push up overnight and then have a little bit of a pullback before open, and we open up in the middle of the overnight range here, say around 47.24. Not saying that's where we're going to open, but let's just use this as an example. If we open here and we push up, say we get a rejection off of overnight high or maybe off of last week's 50%, and we push down, but we create a higher low at or above this opening print, this opening price level, then we want to look to enter into calls, right? And when we enter calls, the first target's going to be overnight high if you get in or below overnight high, but that's not, even if you get in under the overnight high, that's not going to give you a lot of magnitude. So the real target at that point is going to be previous high of day. Now again, if you get to previous high of day, now we have to look at the 4-hour and day triggers and targets, which we'll get into here in a minute. But from a scalping perspective, you're looking for your higher lows at or above opening print, targeting your previous high of day. Now say we open here and we push down, maybe we get a bounce off of last year's 50%, or we even push down further and we get a bounce off of overnight low and we push up. If we get a lower high at or underneath opening print, then we want to look to get into puts. First target being overnight low. Again, not a lot of magnitude, so if you want to unload some there, I guess you can if you've got in the money call puts or something like that. But the real target at that point is previous low a day. Now you do want to be a little bit careful. We've got last week's low here at 45.14, and we've got the 100% fib extension of that April to May bull flag, right? So those are some pretty good levels of support that you got there before you get to previous low a day. Now, if you get to previous low a day and we continue to go further, then again, get into a 4-hour and day triggers and targets, which we'll get to in a second. But from a purely proven and repeatable strategy, it's pretty simple, right? Higher lows at or above opening print, get into calls. Lower highs at or below opening print, get into puts, right? And then it's up to you to manage your risk and what you want to do with the trade. But that should be a fairly easy general entry point for us, right? So let's go ahead and look at more of the full day trade type of chart. So we'll go to the 4-hour first, right? And we talked about earlier how it's almost set up for a lower high in this case, right? Now we want to continue to push overnight. We are up overnight, so we're not going to be opening at the lows of the second 4-hour candle from Wednesday. But it's going to be really easy if we get some pullback overnight to go 2 down in that first 4-hour candle, which would trigger this as being the lower high. A lot of magnitude here on that move as well. So if we do go below 46.76 in that first 4-hour candle, the magnitude for that move is 43.21. So you got a lot of room. Again, last week's low and that 100 pip extension from the bull flag as possible bounce points. So be careful and your risk to reward. Now, if we do get the further push to the upside, we do have kind of a sloppy combo 2 down, 2 up, right? So here's the 1, here's your combo 2 down, here's your combo 2 up. If we go above yesterday's high, or the high of the second 4-hour candle, that kind of re-triggers that. So the magnitude is the high of the candle to the left of the 1. So if we go above, what's this, 48.43, the magnitude for that move is 50.19. So it's a decent amount of change there that you can pick up to the upside. Now, if we look at the day chart, let's just pull out a little better chart here for us, right? We can see we've got the expanded broadening formation giving us a pretty steep slant here, right? So if we do get that downside push, it could be a fast and hard drop, right? And if we do go below Wednesday's low, it doesn't give us a lot of magnitude for the immediate strat reversal, right? This is a 2 up, 2 down, the magnitude being the low of this 2 to the left of the 2 up. So it would trigger, let's make this bigger for those on phone. I apologize. I forget sometimes just because I'm on the computer, right? But if we make this bigger, if we do trigger and go below Wednesday's low at 43.21, the magnitude for the move is 42.53, but we've got the gap below, right? Now, just as we had, last week's low and the 100% fib extension of the bull flag from the 4-hour chart, from the day chart, we've got last month's 50% line, right? And a lot of times that can be a pretty major bounce point, right? If you get a pullback to the previous month's 50% line, a lot of times you can get a bounce. So we may not get the immediate bounce off of there, but we could, which would keep us from closing the gap. But even if we close the gap, not only do we have that there, but we've got the market makers expected move low down here at 41.87. If you're not familiar with that, check out the weekend video. But even if we don't, stop at last month's 50% and we wick through it, once we close that gap, we could see a gap fill reversal situation come on, right? No more gap to the upside from Monday to Tuesday. So we close that on Wednesday. I'm sorry, Monday to Tuesday was the gap. We closed that on Wednesday. So no more gap to the immediate gap to the upside calling our name, but we do have this gap up here at the 60, around the 60 area. So if we bounce off of good support, we could go back to pressing those levels, right, and attempting to get into that gap. Again, not calling for anything. We just set our triggers and targets in each direction and respond accordingly. Speaking of those triggers and targets, let's just look at the hard numbers here. So for Thursday, November 6th, there will be 37 trading days left in 2025. The close, actually, I think I forgot. Okay. The close for Wednesday, November 5th was 46.83. And we know that to flip the week green and the month green, we need to get to 49.49. Now, for the quarter and year to flip red, we'd have to go down quite a bit. So don't think that's as much in jeopardy as being able to flip back into full time frame continuity and getting the week and the month green. Again, the week's expected move was plus or minus $5.91, giving us a range of 53.69 to 41.87. Again, check out the weekend video if you're not familiar with that. And then we can go ahead and remove the gap that was from Monday, Tuesday. Again, we filled that on Wednesday, but either way, we know where our gaps above and our gaps below are. We talked about, from a scalping perspective, the general rule, higher lows at or above opening print, we want to get into calls. Lower highs at or below opening print, we want to get into puts. So we don't have any scalping triggers and targets out there. That'll be all determined by where price opens. But looking at the 4-hour chart, we could, if we push to the downside in that first 4 hour, we trigger the 2 up, 2 down at 46.76, and that's got a pretty decent magnitude there of 43.21, right? A little over $3. It's a pretty big move for SOXL, but it's known for having those moves intraday, right? Because it can move so much. Why do we have 43.53 as the extended? The gap close is 42. That should be 42.53. There we go. So we've got 43.21 as our magnitude for the move, but the extended target that we've got out there is 42.53. That's to the downside. Now on the 4-hour chart to the upside, again, we would have a 2 up, 2 up if we go to the upside, and it also triggers that kind of sloppy 1 combo 2 down, combo 2 up at 48.83, and the magnitude for that 1 combo 2 down, combo 2 up is 50.19. If we get above that 50.19, we've got that extended target of 50.76, and that's just below the 138.2 fib extension of the bull flag. So I think it was a higher high on like a day or 4-hour, on the 4-hour chart, and that's why we listed it instead of the 51.91. But you can see we've got the 51.91 down here on the day chart. But anyways, from the 4-hour perspective, those are your triggers and targets. From the day perspective, if we go to the downside, again, that's a 2 up, 2 down, triggering at 43.21. Not a whole lot of magnitude at 42.53, but we've got our extended targets here of 41.47, which is obviously the gap close, and then 39.85 and 38.77 as extended targets if we really get to push into the downside. To the upside, it's a 2 up, 2 up, but really triggering a 2 down combo 2 up. So that triggers at 48.43 and gives us a magnitude of 50.19. Plays right in with the 4-hour 1 combo 2 down, combo 2 up as well. And then again, we've got the 50.76 as an extended target, which is a higher high on the 4-hour chart, if I'm not mistaken. But the 51.91 is the 138.2 fib extension of the bull flag from April to July. I'll just pull it up for you just so you can see. Here's the week. All right. Make this bigger here. Here is our flagpole. Here's the April low, July high. Here's our flag. Here's the push up. Here's the 100 fib extension, which we tested and kind of pushed through. But the 138.2 fib extension is this 51.91 up here. All right. So that's where we're getting those from. Just getting back to the hard numbers. We won't go back to the charts here. We've gone enough over the charts. So we'll just look at the numbers. We have triggered the 2 up, 2 down. This is no longer in bold because we're no longer in force, right? We got to be below 45.14 for it to be in force, but we do want to leave this underlined to signify that it has triggered. We did not reach the magnitude or any of the extended targets, so just keeping in mind that we have triggered it. If it goes back below 45.14, then we're looking for a magnitude of 35.97. Now, we talked about how it wouldn't be too hard to go green 3 or bullish engulfing candle this week. To do that, we just have to reach 50.76, and at that point, we've got some extended targets here, 51.91, 53.15, and so on to the upside. Don't think that we would really see any of those. Maybe the 51.91. This might be a little much, just how we're almost to the end of the week already. So, still looking for a green 3 or the bullish engulfing. Again, that would be quite bullish. But even if we don't get it, if we get the further push up and still close like with a failed 2 down on the week, that just gives us a higher probability of going 2 up next week, or a better chance of going 2 up next week, I'll say. Right now, from the month perspective, we are still an inside month. We talked about that. We're in the upper third of the previous month's price action, so looking to trigger the 2 up. It would just be an extension, a 2 up, 2 up. That does trigger at 50.76, and we've got some extended targets here, 54.42, 56.92, and so on. To the downside, if we go to the downside, we've got to reach 33.98. So don't really see that on the table at this point. If we continue to push down, we'll talk more about that when it comes up. From the quarter perspective, again, we fulfilled this 2 down combo 2 up reversal when we went above 35.49. Didn't have to go too far to reach magnitude at 36.15, and that 36.15 then triggered the 1 combo 2 down, combo 2 up. Right, we've already reached a couple of these targets on the way up to the magnitude of 70.08, but because that's such a big move, we've got to have these intermediate targets, and I went ahead and added a couple more at the beginning of this week because we had reached this 50 level already. So again, looking quite bullish on the quarter perspective, and on the year perspective, we triggered the 1 2 up 2 down, didn't reach magnitude, so we've got the higher low. Like I said earlier in I think it was last week's video, one of last week's videos, I didn't think a green 3 or a bullish engulfing candle on the year chart would really be on the table this year. But, we're pressing, and we've still got a whole 2 months left. So if there's any type of Santa Claus rally, we'll just say that it's on the board now. We weren't putting it on the board previously, but it is possibly. And if we do reach that, that's rather bullish, I would say. At the same time, we really have to look at where we're at from an overbought position, and see if we might have a bigger pullback. I hesitate saying correction, but a bigger pullback than what we've seen in the last week or two, right? But anyways, there you have it. Triggers and targets from scalping chart all the way up to the year chart. So I hope everybody has enjoyed today's video. Tried to cram in as much information as possible without taking up too much of your time. So if you did enjoy it and you've made it this far, give us a thumbs up. It really helps to go a long way in building the channel. Again, I just want to say a big thanks to those who continue to tune in, who continue to give us a thumbs up, who continue to comment on the videos as well. We've had some good interactions in the comment section of the videos, and we want to really keep that going so that we can continue to spread this information to as many people as possible, right? We just want to make the market a little bit easier to deal with. It shouldn't be hard, shouldn't overcomplicate it, and we think that our methodology is a way to kind of simplify things down a little bit. So again, thanks to all those who continue to watch. It really means a lot to us. It means that we're not doing this for nothing. So again, it's a free channel. We're not selling anything right now, and because we have grown the way that we've grown, we are looking to try and to give back to our viewers, and maybe try and give something away or something. So if you got some ideas, put it in the comments. Nothing too crazy, but we do want to acknowledge that we do appreciate those that continue to view. So like we say at the end of every video, if you're watching this Wednesday night, I hope you get some good rest tonight. If you're watching this Thursday morning, hope you got some good rest last night, and hope everybody is refreshed and ready for a great day of trading.